President Trump is launching new tariffs, this time on steel and aluminum. But the reason why these tariffs on steel and aluminum are so interesting compared to all the other tariffs I've talked about in the past is because we actually have recent economic data showing us the impact of steel and aluminum tariffs on the United States, on the economy, and on investment values. That way, hopefully, you can kind of predict what's going to happen better with these steel and aluminum tariffs, and maybe it can help you be an even smarter investor. So what I want to do in this video is break all this down by talking about number one, what's going on with these tariffs. Number two, how does this potentially create an investment opportunity? And number three, what are the risks associated with these tariffs? Let me start with number one, what's going on with these tariffs? President Trump is announcing a sweeping 25% tariff on steel and aluminum. Here's what he said, quote, any steel coming into the United States is going to have a 25% tariff, aluminum too. Now here's the interesting thing. Back in 2018, Trump also passed a 25% tariff on steel and 10% tariff on aluminum. But back then it was primarily addressed towards China, and a lot of those tariffs are still in place today. So some people are wondering, does this mean that China is going to see a double tariff? And what's going to be the real impact? Well, what we know is the other countries that are going to be impacted by this include Canada, Mexico, and Germany. But not just that. There's a lot of different things happening with tariffs at the same time. Because we know that when the first talk about tariffs started, we covered all this in market briefs, but the first talk about tariffs included a 25% tariff on Mexico goods, a sweeping 25% tariff on Canadian goods, and then a 10% tariff on Chinese goods. Now, the Canadian and Mexican tariffs are put on pause right now. They are still scheduled to start later, but we'll see what actually happens with that. And the Chinese tariffs did go into effect. And as a response, China then added a retaliatory 10% tariff on many goods coming into China from the United States, including things like liquefied natural gas, crude oil, and agricultural machinery. But the interesting thing about steel and aluminum also is that we import a lot of our steel and aluminum from other countries. This is from JP Morgan Chase Bank. They say that the United States relies on imports for more than 80% of our aluminum needs, and Canada is supplying about 70% of all raw aluminum into the United States. So what is the goal with these tariffs? The goal is to use more American providers of steel and aluminum by making it more expensive to work with the Canadian companies, to make it more expensive to work with the German companies, to make it more expensive to work with the Chinese companies. That way, people that want to buy steel and aluminum are almost forced by price through the tariffs to buy the products from American manufacturers as opposed to the other countries to keep more money coming here, which then ultimately brings us to number two. How does this potentially create an investment opportunity? Now, I gotta let you know a couple things. Number one, I'm just a random guy on YouTube. Investing has risks and you're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. And then number two, you wanna stay up to date on what's happening. That way you can stay ahead of the shifts. And my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we cover what's happening in things like the economy, stocks, housing, crypto, and the global economy into a fun, witty, and easy to read newsletter. It's completely free. We have hundreds of thousands of investors that are reading Market Briefs every day. So if you have not joined yet, I got the link for you to join down in the description below. As soon as the news came out about these steel and aluminum tariffs, we saw some companies in the United States pop off. For example, Cleveland Cliffs surged by more than 14% at one point. Nucor jumped over 7%. Alcoa was trading at one point more than 4% higher, and US Steel also rose by a few percent. Why? Because a lot of investors are now anticipating and hoping that these tariffs on foreign country metals will mean that if you or another business wants to buy steel or aluminum, you are almost going to be forced to buy these products from American manufacturers of steel and aluminum. So, could that create an opportunity for you to potentially invest in these companies? Well, I'll leave that up to you. I'm not going to tell you what to do, but that's where some investors are looking at. Not to mention, that there's a lot of uncertainty, although it's not completely uncertain, but there is uncertainty as to what's going to happen with the price of steel and aluminum. What we saw happen in the past during the 2018 tariffs on steel and aluminum is that steel and aluminum prices started to pop off as soon as the tariffs were passed. That lasted for around 6 months. And then after the 6-month mark, we started to see steel prices begin to fall. And eventually, the prices of steel became cheaper than what they were before the tariffs. Now, history doesn't always repeat itself. We don't know if that's exactly what's going to happen again, not to mention the fact that in 2020, the pandemic hit and steel prices skyrocketed. So yes, there are some differences. And yes, we don't know exactly what's going to happen this time, but we can kind of infer that we could see a short-term spike in steel and or aluminum prices, and maybe after the tariffs settle in, that we could see the prices of the steel and aluminum begin to fall again. Will it be different? I don't know. But that's what we saw happen historically, so you can take that for what it's worth. Now, the interesting thing about this is we've already seen more and more companies begin to look at domestic metal buying. What do I mean by that? Over the last decade, we have seen a 35% drop in steel imports into the United States. And a big reason for that has to do with the Trump tariffs the first time around, because people already started moving their steel buying decisions away from China, away from Canada, into the United States. This will hopefully, according to the Trump administration, bring even more steel and aluminum buying into the United States, which would, in theory, create more jobs here, create more profits here to benefit the United States economy, and create more tax dollars outside of the income tax, because if companies are making profits, well, that's another tax revenue source for the United States government. Now, I'm not going to get into potentially trying to remove the income tax, replacing it with the tariff tax in this video, because I've already made a video covering that. So if you want to learn more about that, I'll link that video down for you in the description as well. Now, some countries will be hurt more than others. For example, Canada is currently the biggest exporter of steel and aluminum into the United States. Germany is also a big steel exporter into the United States, and through these tariffs, those economies could also be hurt. Why does it matter for you? Because if you are an investor who's investing in international markets, it's something you might want to pay attention to. Because if those countries, say Canada, say Germany, are getting less dollars from the United States, certain companies might be getting hurt. And that could impact the broader economy depending on how much of a drastic change happens in spending from American dollars into those economies, because the United States economy is very strong. It is the strongest economy in the world. And so a lot of countries don't like these tariffs because that means that those economies are going to get hurt. So why does this matter for you? Well, if you are a United States investor, it could potentially impact where you're investing domestically in the United States if you see more opportunity. But it can also create new opportunities or new pains, new risks for international investors if you're investing in economies outside of the United States. Because yes, as a United States citizen, as an American investor, you can also invest in economies outside of the United States as well through the stock market. There are ETFs that allow you to do that. There are index funds that allow you to do that. And there are a lot of different ways for you to invest into foreign markets. So if that's something you're doing, it might be something you want to think about. But I also want to talk about the risks. Now, there is a whole array of risks, but I'm going to talk about just a few. Number one is, of course, if we see a big spike in steel prices, it could have an inflationary impact, which is the prices of things go up that have steel in them. We know what the impact of that is. Number two, this is from Apollo Global Management. What they said is that these tariffs, if they continue and they slow down the economy, it could deliver a, quote, stagflationary shock to the United States economy. Now, again, what is stagflation? Stagflation is when you see slow economic growth and high inflation. Essentially, it means incomes are falling, the prices of things are rising. It's not a great combination. But the topic of stagflation is not new. It's been going on for years now because of concerns that inflation is not going away while the economy is not growing as fast as it was in 2020 and 2021, back when there was a whole bunch of stimulus happening. So are there concerns and risks with these tariffs? Absolutely. There's also the concern and risk that this could make the trade war worse. But there's also now the potential upside that maybe, if done correctly, these tariffs could mean more spending is happening inside the United States. More American companies get to grow. More American companies are hiring more employees inside of the United States. More American companies grow their profits and more tax dollars in the United States through that. So again, is it uncertainty? Absolutely. But we have seen in the past that the tariffs on steel and aluminum have worked in the past to bring more of that steel and aluminum buying into the United States. This time it's more sweeping. Last time in 2018, it was more narrow, it was more niche. This time it's more sweeping. So, we don't know exactly what's going to happen, but this is where you can kind of infer, based on what we've seen happen in the past, two things that are happening today. So, as a financially savvy person, again, the goal is not to get caught up in the emotion, because a lot of media companies love selling clicks. All they want to do is get you a scary headline or a super exciting headline to make you want to click an article, because that's how they get paid. This is one of the reasons why I'm such an advocate for market briefs, because all of the information is in one email and we don't have to have all the sensationalism. But the reality is, emotions are the enemy of profits. Once you can get away from the emotion, now the second thing that you can do is understand, well, how do you actually take advantage of the opportunity? Now, this does not mean you have to go out and start investing in steel companies, but what this does mean is you have to become an investor. And in order for you to become an investor, because the reality is our economic system is designed to reward investors, you can't spend all of your money. That means you have to have a system for your money, where you have money every time you get paid put aside to invest, and some money put aside to save. If you're not doing this already, watch some of my financial education videos on my channel that will walk you through how to use your paycheck. That way you always have money to invest, that way you always have money to save. Once you do that, now you got to figure out what is your investing strategy. Just because there is an opportunity out there doesn't mean it's a good opportunity for you, because a good opportunity requires you to actually do the research. It requires you to keep up with the companies. It requires you to understand what's happening and to understand those risks. Not every person is made to go out and take more active risks. In fact, for most people, the best thing to do is probably just invest in the S&P 500. That is a group of the 500 largest companies in the stock market. And now you follow my ABB strategy, always be buying. And you just buy every week, every 2 weeks, every month. You buy when markets are up. You buy when markets are down. You buy when markets are sideways. You always be buying. The key word is always. You're buying no matter what is happening. Some of you are going to say, well, I want to be a little bit more involved. I don't mind taking on the additional risk. I know that there's more risk and I'm willing to do that. Well, now you're going to, again, find the right strategy for you. Again, I'm just a random guy on YouTube. I can't tell you what to do. You got to go out and do your own research. But maybe this means you want to start looking for market shifts. You want to start looking for more unique opportunities. You want to start looking for more niche places where you can put your money. This is where you start to spend time and effort and energy, maybe even money, into studying shifts, into researching what's happening as an investor. And now you can start to look for, well, okay, there's this shift happening in the economy. Maybe I can invest here. Now, of course, it's more risky, but you also have the potential for more upside. Now, if this is something you want help in, my team at Briefs Media also has a whole product called Briefs Pro, where we have more financial education and investor research products. They can get more advanced. So if that's something that you're interested in, you can also look into that. But start with the free product, which is Market Briefs. And then if you want more, you can also check out Briefs Pro from there. But the key is understanding, number one, investors are the ones that build wealth in this economic system. So you need to become an investor. Once you understand that, now you can start systemizing your money a little bit smarter so you have money to invest. Once you have money to invest, you have to have the right strategy for you. A strategy is not following the advice of a random guy on YouTube or a random person on the internet. You got to find what's right for you, because your risk tolerance is different than everybody else's. Your goals are different than everybody else's. Your experience is different than everybody else's. And then you got to go out and start learning and implementing. That's really the secret to going out and building it. It's not really a secret, but that's how you do it. You got to start systemizing your money, understand how to invest, and then find the right strategy for you, and then go out and implement it. And when you lose money, keep getting back up, because the reality is you will lose money at some point, but the key is to make a whole lot more than you lose, because that's what every investor does. And with that, I'll see you on YouTube tomorrow.